Unless you've been living under a rock, you know for the last couple of weeks the stock market has been extremely volatile. We haven't seen this level of volatility since the last recession in 2008, so it has a lot of investors worried that we may be heading into another recession. We've literally shaved off more than 2 years worth of gains in just a span of a couple of weeks. And what this has done is led investors to do one of two things. The first is they've decided to cut their losses, sell out of their positions, and just wait in cash for a bottom to come in and then buy back into their stocks. But the second group of investors are actually standing strong, averaging down on their positions and looking at the long-term potential of their companies. Personally, I'm in the second camp here. I'm buying stocks at these suppressed valuations. I'm taking advantage of these discounts that we're seeing. And I'm going to explain to you in this video exactly how I'm doing this, how I'm pacing myself, and why it's important to do so, because we may not be done selling off here, even though we've already gone down around 20% in just a couple of weeks. Now, I know these are tough times, but if you're still with me and you're standing strong here, drop a like down below to show your support. And I also really want to hear from you guys in the comments section below as to what you're doing right now with this market correction and all this volatility. Are you just sitting back and just watching your portfolio? Are you selling out? Or are you like me buying more stock? I'd love to hear your thoughts in the comment section down below. Also, I want to add, there's been a ton of you asking me, what am I doing? What are my thoughts on XYZ? I am going to read every single comment that you guys leave. So comment down below. If you want to see another video on a particular topic during these times, let me know, and give a thumbs up to any comments that you think are relevant, something you want to see. And I'll try to make videos going forward on the top comments that we see from this video. Okay, so now let's talk stocks. Like I said, the VIX is hitting levels it hasn't hit since 2008, and it has a lot of investors just panicking here, but what I want you guys to do is keep a level head. What you really need to do at times like this is just see things for what they are. Sure, stocks are down 10%, 20%, 30%, some even down 40 or 50%, but I want you to act rationally here. Don't act on emotions and just see things from a high level. Don't let your emotions get the best of you. Be logical, because this is the time that you really need to take advantage of significant dips. Panicking is not going to help you. Selling right now at these lows and cutting your losses is not going to help you, because when we do see that recovery, and it's going to be a good recovery when that does come, you will most likely miss out on it, because you'll still be waiting for the bottom of this correction, and that's typically where most investors lose out big time. So look at this table here, which is pure data and facts from 1999 to 2018 in the S&P 500. If you try to time the market, like selling now and waiting later to re-enter your positions, you could miss out on these potential types of gains. If you miss out on the 10 best trading days, your returns would have been cut in half compared to if you just stayed invested. If you missed out on the best 20 trading days, your returns would be flat for the whole time that you've been investing. And then from then on, if you've missed more than 20 best trading days in that huge time period of almost 20 years, you would have had negative returns because you tried to time the market. And usually these 10 best days happen when we see extreme volatility in the market like we are seeing right now. It's not normal for the S&P 500 or the Dow to swing 4 to 5% in a single day, but it is the reality of the situation, and it is what's happening right now in the stock market. As investors, we just have to adjust to this. We just have to take a step back and just let the market do its thing, because if we try to change our strategy to try to time when it's peaking or when it's bottoming, we are going to miss out, because that's typically when investors lose a lot of money in volatile times like this. So what am I doing here? Personally, I'm staying invested, and I'm taking advantage of some extremely cheap valuations that I'm seeing in high quality businesses. So let me take the time now to actually discuss my strategy moving forward, at least for the foreseeable future, what's changed, and how I plan to approach this stock market crash that we're seeing here. So there's three main things that I want to focus on during this crash or correction or whatever you want to call it. Now, I've always been a big advocate of keeping cash on the sidelines, keeping a good portion of portfolio in cash when markets are hitting all-time highs, rallying, and it's hard to find deals out there in the market. instead of forcing trades, just keep a good portion in cash for times like this where you can pick up great businesses at incredibly cheap valuations. Just 3 weeks ago, we were trading at all-time highs, and it was very hard to find companies that were good valuations. I mean, you did have companies like Altria, 3M, or IBM, which were trading at attractive values. However, they have been in a pretty steady decline for many, many months. So they weren't really presenting a unique opportunity per se. It was an opportunity, but you had tons of time to really average into that position over time. The sentiment around those companies were just negative, the news cycle was negative, and that just resulted in them just trending lower over time. So you could casually just add a little bit more to your position every so often. But when you looked at popular stocks like maybe AMD, Apple, Microsoft, those stocks were trading at all-time highs. They did not want to pull back on any sort of correction. And it was really difficult for investors like myself waiting for value in these stocks to actually enter a position in them. So because of this, naturally, I just kept holding cash because I knew one day the opportunity would come to add some cash into these positions. And I actually reached around, I believe, around 36% of my portfolio sitting in cash at its peak. And because of this, it gave me that flexibility over the last couple of weeks to start deploying some of that cash into the market, into these incredible companies like I've talked about, which have pulled back significantly since their all-time highs. And of course, as a result, as you can imagine, my cash balance is actually down quite a bit now as I've continued to deploy my money into these incredible businesses. So the other important thing I need to discuss with you guys is the type of stocks, the type of businesses that I've been purchasing recently. What I've done is I've actually stopped buying shares in companies like Square, Texas Roadhouse, and those kind of smaller companies, which I do believe are good businesses, but I wouldn't necessarily consider them strong premium brands out there in the world. But on the flip side, stocks like Starbucks, for example, is one that I would consider extremely premium, one that does not go on sale very often. However, right now we are seeing good opportunity in Starbucks. We are seeing valuations that are much more attractive. So it doesn't really make sense for me to go deploy cash into something like Square when we have a premium stock like Starbucks that's pulled back recently. Personally, I'm focusing on companies that have a good brand name, strong fundamentals, strong growth, and I really want companies that are pretty much the best run company in their sector. Those are what I would consider premium brands, premium companies. And now we're finally seeing some of them come down in valuation to attractive levels, which makes sense to start nibbling in on positions with. Now, a lot of these companies are going to suffer a bit in their earnings reports for the next few quarters, but looking a few years out, I think that this is all going to be behind them. They're going to continue growing, they're going to continue getting stronger, and I'm going to be happy that I purchased these stocks at these suppressed valuations. Now, there are companies like Carnival Cruise or iRobot, which are also trading at significant discounts. However, I don't consider those companies as premium brands, and I've held off putting any cash into those types of companies because, like I said, premium stocks are on sale right now and we don't see this opportunity very often. Really, what you need to look for is large companies that have pulled back maybe 20 to 30% with this whole market downturn, not necessarily because the business is suffering or the business is dying, but just because there's fear out there in the market and investors are acting irrational at times like this. You typically see this kind of volatility in smaller businesses with maybe a couple $1 billion market cap, but you don't really see it that often with companies that have $100, $200 billion market cap. So you need to take advantage of those situations when it presents itself. And now if you're interested in 3 stocks that I would consider premium that I am personally buying here in March 2020, make sure to check out that video as well. I'll leave a link in the description down below. Now what I'm doing here is extremely important. When we see stocks that have corrected, instinctually, if you're a long-term investor, you want to throw all your cash at it, average down on those positions, or enter those new positions at incredible prices. The result of this is you deploying your cash too quickly, and that could end up burning you because we could be headed even lower, and you missed out on averaging down on those positions because you were too hasty with throwing all your cash into the market ASAP. Now, this is something I've fallen victim to many, many times before, and it's something that I've tried to pace myself with here during this correction. So like I said, I'm buying stocks, but the key is I'm not buying stocks every single day. I'm trying to pace myself here, and I'm pretty much trying to add to my positions that I think are at good values on a weekly basis. I may stretch this out to an even longer time frame depending on how the market does over the next couple of weeks, but so far it's pretty much been on a weekly basis. We don't know how long this crash or correction is going to continue. Maybe we bottom out in the next week or two, maybe it takes another couple of months, or maybe it takes another couple of years. You don't want to be left in a position where you've thrown all your money into the market, stocks drop another 20-30% from these levels, and then you have absolutely nothing left to average down on. So it's very important to make sure that you're pacing yourself, you're pacing your buys, you're not rushing into the market. Because guys, let's be real here. Whether you pick up a company like Boeing, for example, at $230 per share, or you pick it up at $220 per share, it doesn't make too much of a difference over the long term if Boeing, say, hits $500 per share. So try to keep emotions out of it, try to pace yourself, because that's one of the most important lessons you can learn during times like this when pretty much every business out there is on sale. Missing out on a little bit of recovery gains is worth it to hold a good portion of cash just in case we do end up going much lower, which will give you an even bigger recovery gain if that does happen. Now on the flip side, if it doesn't happen, say we bottom out and start moving higher, well then just continue your regular schedule, add into your positions, maybe on a weekly or bi-weekly basis, add in small chunks, and just dollar cost average your cost basis to a price that you're happy with. And once that company has reached a valuation that you think is fair, stop buying and just hold on to that position. That's what I'm doing, and that's what I've been doing with a lot of my positions over the last few years. Now, like I mentioned at the beginning of this video, I really want to hear from you guys as to what kind of videos you want to see covered on this channel over the next few weeks. I know these are volatile times, and I know that there's a lot of emotion that tries to creep into your investment decisions during times like this. So I really want to be here for you guys, and I want to create videos that you think would be helpful during times like this. So please comment down below, drop a thumbs up on any comments that you feel are relevant for video topics you want to see, and I assure you guys that I'll make those videos happen. But really what I want to say is that just stand strong, we'll get through this. This is just going to be a short-term blip over the next 10-20 years or so. And more likely than not, if you're sitting on the sidelines waiting for a bottom, you may actually wish that you bought into positions at these levels if we do turn around sooner than expected and recover sooner than expected. No one knows what's going to happen, but I'm standing strong here. I'm going to continue buying stocks at these suppressed valuations, and I'm going to continue holding them for the long term. Guys, thank you so much for watching. Hope you enjoyed this video. Don't forget to invest positively, and I'll see you in the next one.